There's been a lot of speculation lately about whether Ripple will go public in 2025, especially with recent comments from Brad Garlinghouse and news involving the European Central Bank's push for a digital euro. Despite the buzz, the truth is that Ripple doesn't really have a strong incentive to go public right now. Brad Garlinghouse himself has addressed this, stating that most companies go public to raise capital, but Ripple hasn't been in need of additional funding. In fact, Ripple's business has remained self-sustaining, and the US market hasn't exactly been the most welcoming environment for such a move until recently. So, from his point of view, there's been no urgency to start that process. The notion that Ripple will definitely go public in 2025 just doesn't seem grounded in reality, especially considering that even if they decided to do it now, it would still take a significant amount of time. The idea has been floated in discussions before, but nothing concrete has been announced. Some say, yes, it's going to happen, but others, including seasoned analysts and writers, maintain that it's unlikely. One big reason is controller remaining private allows Ripple to make its own decisions without having to answer to shareholders, which is a huge strategic advantage. On another front, Ripple's recent acquisition of Hidden Road has sparked new discussions. With that purchase, Ripple now has a company under its umbrella that holds FINRA approval as a broker-dealer, meaning Hidden Road can offer institutional clients a complete suite of services like prime brokerage, clearing, and financing for legally supported fixed-income assets. This fits into Ripple's long-term strategy, one that Brad Garlinghouse has spoken about often. The goal is for Ripple to become the Amazon of crypto. Just like Amazon started with books and evolved to offer virtually everything, Ripple began with cross-border payments and is now building an ecosystem that will eventually provide a full range of financial services for businesses. This includes everything from stablecoin infrastructure and asset tokenization to institutional CBDC solutions. They are incredibly disciplined and strategic, mastering one area before moving on to the next. There's also increasing alignment between Ripple's technology and broader developments in global finance, particularly in Europe. The European Central Bank is pushing forward with plans for a fully digital euro. Christine Lagarde, who once led the IMF and now heads the ECB, understands the importance of modern financial technology but has consistently steered clear of Bitcoin and similar assets due to concerns around their association with illicit activity. Instead, the ECB has focused on tested, secure systems, many of which have been evaluated for over a decade in controlled environments like regulatory sandboxes. Some in the crypto space believe the ECB has already chosen its preferred technology stack for the digital euro and for handling central bank digital currencies, CBDCs. In general, Ripple is widely suspected to be a key player in that infrastructure, especially given its emphasis on compliance and its deep ties to institutional finance. There's a growing belief that Ripple is uniquely positioned to help launch bulk CBDC platforms for governments and banks, while also possibly integrating the digital euro onto the XRP ledger in some capacity. Overall, Ripple's strategy is becoming clearer. They are building something much bigger than a payments company. They are creating the financial rails for the digital economy of the future slowly, methodically, and with precision. Whether they go public in 2025 or not seems less important than the fact that they are quietly becoming a central piece of global financial infrastructure. Imagine going to Target, Walmart, or any store you typically shop at and being able to spend $100 in stablecoins just like regular money. That's the kind of flexibility central bank digital currencies, CBDCs, aim to offer. Essentially, it means money would flow from a central bank through commercial banks, similar to how our current banking system works. We, as individuals, don't have accounts at the Federal Reserve. Instead, our banks hold those relationships, acting as intermediaries. The euro system, for example, is exploring a wholesale CBDC built on distributed technology, DT, to modernize how transactions and settlements work, especially within target services. This would enable real-time payments and could allow developers to collaborate on infrastructure that simplifies the settlement of large, institutional deals using long-term government money. Ripple has been part of this digital euro initiative from the start and even collaborated on a recent paper and Zoom session. On another front, the DTC Depository Trust Clearing Corporation, which processes an astonishing $2 to $3 quadrillion annually, is developing infrastructure for digital collateral movement in partnership with projects like Chainlink. Their new platform aims to automate collateral movement using blockchain and smart contracts, which would greatly improve the speed, customization, and efficiency of complex financial trades worldwide. DTCC has been working on going digital for over 6 years now and has partnered with several blockchain entities, including R3, which uses XDC. However, R3 has recently struggled with user adoption, raising questions about its long-term viability. One thing that doesn't get discussed enough is whether assets like XRP will be used for settlements. While R3 and XDC are designed for settlement purposes, XDC being based in Singapore raises concerns, particularly considering the importance of the DTCC as a US financial infrastructure that handles settlement for trillions in stocks, bonds, and more. It seems unlikely that such a critical US institution would rely on a foreign-based token. Adding to that, Don Donahue, former CEO of DTCC, later joined Ripple's board, which suggests deeper ties between Ripple and US financial institutions. So even though it's still unclear which asset will ultimately be used, choosing a non-American blockchain like XDC feels like a missed opportunity, especially at a time when US policy appears focused on promoting American innovation. Using Ripple and XRP-based solution would seem like the more strategic path for national financial infrastructure.